From the outside, celebrity wealth looks effortless. A headline here, a deal there, numbers that seem to leap overnight. But books, biographies, and long conversations away from the spotlight reveal a far less glamorous reality. Celebrity-style wealth is not built on sudden luck. It is built on structure, deliberate, repeatable, and often invisible to those who only see the outcome. The first misconception is that celebrities build wealth differently because they are famous. In truth, fame only accelerates what already exists. Financial celebrities who endure learned the rules of money before attention arrived. When visibility came, it amplified discipline or exposed its absence. The guide to building wealth, celebrity style, therefore begins not with tactics, but with posture. At the foundation lies control of income volatility. Celebrities rarely rely on a single paycheck, even early in their careers. Books show a consistent pattern. They treat primary income as fuel, not destiny. Acting fees, investment gains, endorsement money, none are assumed to last. This assumption shapes behavior. Spending stays conservative. Savings stay aggressive. Optionality remains protected. Wealth begins where dependence ends. Another early lesson involves separating earning from identity. Financial celebrities who survive long-term do not confuse applause with permanence. They understand that markets and audiences are fickle. Money earned during peak relevance is converted into assets that do not require relevance at all. Real estate, businesses, equity stakes, royalties. The guide here is subtle. Convert temporary attention into permanent ownership as quickly as possible. Risk, in celebrity-style wealth, is approached asymmetrically. These individuals are willing to take career risks, but not balance sheet risks. They experiment where upside is unbounded and downside is contained. Books reveal that many financial celebrities said no to deals that offered guaranteed money but compromised long-term leverage. They chose uncertainty with control over certainty with dependency. This is not recklessness, it is strategic patience. Another defining element is leverage, not financial leverage, but social and intellectual leverage. Celebrities surround themselves with operators, advisors, and mentors who think long-term. They delegate execution while retaining judgment. This allows them to scale decisions without scaling stress. The myth of the self-made celebrity collapses quickly under scrutiny. Wealth is built in networks, not isolation. Time discipline emerges as another pillar. Despite public perception, enduring celebrities protect their calendars fiercely. They decline most opportunities. They design days that preserve energy for decisions that move compounding forward. Books emphasize that wealth accumulates not from doing more, but from doing fewer things repeatedly well. Attention becomes the most guarded asset. Spending behavior offers another window into the system. Celebrity-style wealth does not grow through frugality alone, but through intentional spending. Purchases are evaluated not by status, but by durability. Does this reduce future costs? Increase optionality? Protect time? Consumption that does not meet these criteria is delayed or avoided. This discipline persists even as net worth grows, because habits outlive circumstances. Another critical principle is narrative control. Celebrities understand that stories shape valuation. They manage public narratives, not for vanity, but for leverage. A consistent personal brand lowers friction in deal-making. Trust compounds, but they also separate public image from private strategy. What is visible is curated. What is valuable is protected. This duality prevents overexposure, a common destroyer of celebrity wealth. Investment philosophy among financial celebrities also converges around simplicity. Despite access to complex opportunities, they favor understandable businesses and assets. Complexity hides risk. Simplicity reveals it. Books show that many lost money early, chasing sophisticated strategies before retreating to fundamentals. The ultimate guide does not celebrate cleverness, it celebrates survivability. Another overlooked aspect is the role of boredom. Celebrity-style wealth tolerates inactivity. Waiting is embraced. Cash is held without shame. Opportunities are allowed to pass. This patience frustrates observers but protects capital. Financial celebrities understand that the next great deal requires being liquid, calm, and uncommitted. Overextension is the enemy of timing. The guide also emphasizes reputation as capital. Celebrities who build wealth over decades treat trust as non-renewable. They avoid partnerships that threaten credibility, even when financially attractive. Books consistently note that one bad association can erase years of compounding. Reputation, once damaged, demands energy that could have been invested elsewhere. Another pattern emerges around reinvention. Celebrity wealth is not static. Careers evolve. Industries shift. Those who endure reinvent early, not reactively. They invest in learning while still winning. They accept short-term dips to reposition for longer arcs. This willingness to look temporarily irrelevant protects against permanent decline. The psychological dimension is unavoidable. Celebrity-style wealth requires emotional insulation. Praise and criticism arrive in equal measure. Financial celebrities learn to filter both. They do not chase validation through spending or risk-taking. Emotional neutrality stabilizes decision-making when pressure peaks. Money amplifies personality. Discipline ensures it amplifies the right traits. As wealth grows, the guide shifts focus again from accumulation to preservation. Legal structures, tax efficiency, governance, succession planning. Celebrities who ignore this phase often watch fortunes fracture. Those who respect it design systems that outlast them. Wealth becomes architecture, not achievement. And this is where the guide begins to sharpen. Because once we strip away glamour, visibility, and myth, celebrity-style wealth reveals itself as a sequence of choices made quietly and repeatedly. Choices that favor ownership over income, patience over activity, reputation over applause, and structure over impulse. It is at this point where wealth stops being about how much you earn and starts being about how you behave when earning is easy, that the true blueprint comes into focus, demanding not imitation of lifestyle, but adoption of discipline, as the final lessons emerge from patterns repeated across industries, cycles, and personalities, converging into a philosophy that looks deceptively simple yet brutally hard to execute consistently, unfolding not as a shortcut, but as a long-term commitment to restraint, leverage, and clarity. Like unfolding not as a shortcut, but as a long-term commitment to restraint, leverage, and clarity. Like a structure designed to hold weight long after attention fades. And this is where the ultimate guide to building wealth, celebrity style, reaches its real conclusion, not in accumulation, but in durability. In the second half of the blueprint, the emphasis shifts from how wealth is built to how it is kept intact under pressure. Financial celebrities who last do not confuse peak net worth with success. They measure success by how little fragility remains in their lives. Fragility to markets, fragility to reputation, fragility to mood, impulse, and circumstance. Wealth, at this level, is not an engine for expansion, it is a buffer against error. One of the most defining traits of celebrity-style wealth is intentional underexposure. As opportunities multiply, these individuals invest in fewer things, not more. Concentration here is not recklessness, it is selective commitment. They understand that attention is finite. Spreading capital too thin spreads judgment thinner. Books repeatedly show that fortunes are preserved not by endless diversification, but by deep understanding of a limited number of positions. Another critical principle is separating excitement from progress. Celebrities are constantly surrounded by novelty new ventures, trends, and invitations framed as once in a lifetime. Those who endure learn to distrust excitement as a signal. They rely instead on alignment with long-term goals. If an opportunity does not improve freedom, resilience, or ownership, it is declined regardless of hype. This ability to walk away defines the mature phase of wealth. Legal and structural thinking becomes central at this stage. Entities are created. Assets are ring-fenced. Risk is compartmentalized. Financial celebrities who ignore this phase often see fortunes unravel through lawsuits, taxes, or poorly designed partnerships. Those who respect it build quiet architectures that absorb shocks invisibly. Wealth becomes less about growth and more about engineering. Another pattern that emerges is the decline of performative consumption. As wealth stabilizes, the need to signal success fades. Status purchases lose appeal. Time, privacy, and health gain value. Celebrities who retain wealth design lifestyles that reduce stress rather than amplify it. This is not minimalism, it is efficiency. Every unnecessary complication becomes a tax on judgment. The guide also highlights how celebrity-style wealth treats failure. Failures are expected, but never allowed to compound unchecked. Small losses are tolerated. Large losses are engineered against. This mindset produces a calm relationship with risk. When fear is removed, decision-making improves. When ego is removed, learning accelerates. Survivability becomes the primary metric. Another essential element is identity separation. Celebrities who lose wealth often fuse self-worth with public relevance. When attention fades, spending and risk-taking spike to compensate. Those who endure detach identity from income early. They build internal measures of success. This psychological insulation protects both capital and mental health during inevitable downturns. Over time, the role of money itself changes. It stops being a scoreboard and becomes infrastructure. Wealth funds, independence of thought, the ability to say no, the ability to wait, the ability to choose environment deliberately. These freedoms compound invisibly, but they are the true returns of the system. As the guide reaches its final form, one truth becomes unmistakable. Celebrity-style wealth is not about living larger, it is about living lighter. Fewer dependencies, fewer obligations, fewer forced decisions. This lightness allows adaptation as industries, technologies, and relevance shift. Those who design for lightness remain mobile when others are trapped by scale. And so the blueprint resolves into something deceptively simple. Build wealth by converting temporary advantage into permanent ownership. Protect it by minimizing fragility. Sustain it by aligning lifestyle with long-term psychology rather than short-term applause. This is not glamorous, it is not fast, but it works. If this guide resonated with you, pause and ask yourself one question. If public attention disappeared tomorrow, would your financial life become more fragile or more peaceful? The answer reveals whether your wealth strategy is built on structure or spotlight. Share that reflection. And if you want to keep exploring how real wealth is designed, protected, and lived, not displayed, stay connected. Subscribe, follow, and return. Because the ultimate goal of wealth is not to be seen winning, but to remain free long after the noise moves on.